right. So, what I was saying is we are going to look at most of these, and knowing that the patterns they are just formations and shapes that appear in the movement of the asset. Then we are going to start the way we are now going to look at the types of these chart type patterns. Types of these chart patterns. Of course, Davis already hinted all of them. There are three types. The first one is the continuation patterns. You may call them trend continuation patterns. Uh, in there, we'll look at patterns that, uh, when they are formed, they signal us that the previous trend, is going to continue. You want to realize that these patterns are normally formed when market is consolidating or when market is ranging. I repeat, these patterns are normally formed when market is ranging or consolidating. When the momentum has reduced, both of the sellers and of the buyers. So everyone is trying to pull, but no one is pulling strongly. So that is what we call consolidation. Price or the market is consolidating, it's most of the times it's where we see these patterns get formed. So when we talk of the first type, which is trend continuation patterns, we'll be looking at some of these patterns: flags, pennants, triangles. In triangles, we have three types. We have the ascending triangle, we have the descending triangle, and the symmetrical triangle. Then we have channels under trend continuation patterns. Are we on the same page?
Yes, please.
I want to repeat this. Under continuation patterns, we are going to look at flags and pennants. Then we are going to look at triangles. Under triangles, we are going to look at ascending, descending, and symmetrical triangles. Then we will also look at channels under continuation patterns. Now, then at number two, under the types of chart patterns, we have trend reversal patterns. You may choose to call them reversal patterns. So here we are going to be looking at heads and shoulders, both the heads and shoulder and the inverse or the inverted heads and shoulder. Then we'll look at double tops and double bottoms. In there also there's another one we call triple top and triple bottom. Yeah. So even that is there, although it is always rare. It's very rare to find, but it's also part of that. And then we will also be looking at rising wage. Um, yeah, and a rising wage and falling wage. I think that's it. That's what we'll be looking at. Then the other ones are the expanding of the rising wage. Call it expanded rising wage and expanded falling wage. All those we'll be looking at them. All right. Then um, lastly, we want to look at bilateral. Now, under bilateral, we have the ones we've seen in reversal. In reversal are normally there are some of those that are also part and that we call bilateral chart patterns, meaning they can break either way. Well, after consolidation, they can break either on going to the buying trend or going to the selling trend. That's why they are called bilateral chart patterns. Now, in bilateral chart patterns, we have only three types. we have the ascending triangle, and then we have the descending triangle, and lastly, we have the symmetrical triangle. Those are the ones that we know that price can break going either side. All right. So, having said that, let's start serious business. Of course, you will when you're going to make your research, you will find other people having more than three types. We'll find people having consolidation patterns. You'll find people having breakout patterns. You'll find people having reversal candlestick patterns. All those are there. Um, I will give you some homework about candlesticks. Then we will also look at them, the reversal candlestick patterns. Then we will actually look at them. But there are some we may not look at, like the rounding bottoms and handle. Those are very rare. Those are very rare. So we may not look at them. I may give that as your homework to go and research about them and see how they're formed. You may even take a whole year not seeing them, or months not seeing those kinds of formation happen in the market. So they are very rare. And then the other consolidations, some people call them consolidations because they are normally formed, like I told you, they are normally formed when price is consolidating. So they've tried to break them down like that, but we know we have three main chart patterns. So I don't want to confuse you. We were going to talk about only those three, and the fourth will be the one for reversal candlestick patterns. All right. Um, Now we are going to start with double tops and double bottoms. Double tops and double bottoms. And I normally love using TradingView to make my lessons because it is easier. So we share my screen now. Actually, before I share my screen, I first get this and then share it. Will I be able to see it? All right, so I want you guys to check your screens, and those are the ones we'll be looking at. I will be sharing them in the group later on, but those are the ones we're going to look at. So if you can zoom in, you will see the very first ones, reversal patterns. We're going to start with double top and double bottoms. All right, so when we are on that very chart pattern, I want you guys to ask me as many questions as you can so that you guys can understand how we can use them and take advantage of them. All right, so now I want to change and present something else so that we can start to look at them. So we have our chart here. Before we start with that, double tops price normally, like, I don't know if I've already told you this, market moves in a formation like this, like this, like this, like that. Now, it we already do we no, we don't. Some Davis may not be knowing that. It comes. in a formation of highs and lows. Let me just deal with that. So market moves in higher high and higher low. That's how it moves. That's how it moves. Higher low, higher high, like that. Then normally this is the break of structure. This is what we call the break of structure. If price breaks the previous high, then that is a break of structure. And most of the times when price breaks the previous high, it normally comes back, it retests to the breaker block. It comes back to the breaker block where it has broken that structure from. So price comes back to that breaker block. Are you understanding that? I want us to go slowly as that. If you have any questions, please you have to ask so that we don't leave you behind. I don't know why this thing is not giving me what I want. It's options where change full screen, open picture in picture mode. Okay. Ah, no, during the call here. Okay. It will not record if I do that. Okay. So if I want to record, I will have to know that you guys are there, so I will not have a picture in picture mode. So, all right. I hope you guys are with me. Davis, have you understood? Have you understood this?
I'm following.
So this is how the market moves, and this very move we call it an uptrend. This is an uptrend. Market, we call
Oh,
that as the uptrend. Market is in the uptrend, or is it's in the buying trend or bullish trend. So it has many names. You can choose whichever you want to use. Bullish trend, buying trend, uptrend, whichever you want to use. So that's how the market moves. Higher high, higher low, higher high, higher low, and then once it reaches a certain point, probably a resistance level like that. Once it reaches a resistance level, then price sometimes it fails to break that. It may retest back to this break of structure, but then it fails to make a new high. Then it returns from there, hence giving us a double top. I want you guys to understand that. Are we on the same level?
Yeah.
Yeah. So most of the times, actually, double tops are always found on resistance levels. What is a resistance level? A resistance level is a level where it is predetermined from the previous data. Let's say a week ago, price had made a high there and it had failed to break it. So price came, started to sell, started to sell, started to sell. Then again, a week later, it started to buy. Then started to buy, it started to buy. When it reached there, it failed to break it. Then it did go down. So that is this would be the the support, the resistance level there, because price has failed to break it. There is we call it a resistance level because buy sellers refuse the price to continue and they start to reverse the market. Whereas on the other hand, down on the bottom here, it is called a support level when price has failed to break through to continue with the sell. So where the previous data was, for example, let's say this was coming from there like that, then we'll know that that is what that is a support level for us here. This was a support level for us there. So you need to know this. This was a support level because of the previous data. You look from the left to see where price had reacted from, and then you draw your resistance level box to help you in future to determine if price will actually still react from that same level. And that normally we call these two levels our points of interest. You need to have them before you when you're starting to analyze. First things first, support and resistance. Always, always. So if you're noting down, support and resistance should be always your first things to look for in the market, no matter the time frame. No matter the time frame. If you open your chart and you're going to probably H1 or M15, you want to first look at support and resistance levels, and there from there you can now start to look at the rest of the technical analysis. You look at the trend, you look at the what is the current trend, because these two, they can even tell you what is now happening, what will be the current trend. And then you start to look at the indicators of maybe the trend, what they're telling you. Then you start to look at the structure formation of all the patterns that the market is forming. And there you start to come up with those patterns, and then concluding on your analysis and making your decision on what to do, whether to sell or to buy or to wait, like that. All right, so far I want to ask if you guys have any questions where we are.
Mr. Coach, I wanted to find out
Hmm.
what could be maybe the factors that determine these resistance levels.
I've told you that would be the previous data. We are going to look at we are going to look at
Oh,
real time in two
thank you.
times. Yes. All right, so we're going to look at that. Just this was an introduction, so that whenever we are talking on the other side of real chat, you're not left out. You'll be knowing what we're talking about. So here is just to give you an overview of what will happen. So this was an uptrend. Like I said, that was an uptrend. Now the downtrend, I don't. I think we can now delete this. The downtrend. The downtrend happens in this way. The downtrend happens in this way. Now this is a previous low. Now if this price comes and breaks this low, this higher low here, then this this very line ceases to be a low. It becomes, I mean, this ceases to be a higher low. This one ceases to be a higher low. Now it will become a lower low. And now we have changed the trend. So it starts to go like this: lower high, lower low, lower high, lower low, lower high, lower low. I hope you are understanding that. This is now lower high. Who is moving out and coming in? Oh, Mzee Yahweh, you're in two times.
No, no, no. I want to come out of the phone and I get on the laptop because I can see better on the laptop.
It's okay.
Okay.
Okay, so now it's I was saying we have now the what? In this here we look at lower high, lower high, lower high, then we have the lower low. That's how price moves, lower low. So price moves in that kind of movement, lower high, lower low, lower high, lower low. Lower high, lower low. So that's what happens. So this is an uptrend, this is a downtrend. This is a downtrend. Call it a bearish trend, call it a selling trend, whichever you want to call it. We have the uptrend, a bullish trend, or buying trend. Then we have the downtrend, bearish trend, or selling trend. That is what we'll be looking at. Lower high, lower low, lower high, lower low, lower high, lower low. Just like that, like that, like that. So knowing that, as we are starting, I told you we are going to start with double tops. And like I've said, double tops happen when they've reached when market reaches a resistance, the double tops. That's when they happen. That's when we see them. So this is a resistance, and the price has failed to make a new high. You can see that it failed. This was supposed to continue here and make a new high, and then retest back to the breaker block, and then continue like that. But it reached the resistance and it failed. So meaning we have a reversal. Hence, the double top being a reversal pattern means the trend is changing from an uptrend to a downtrend. So our usual entry point is when price breaks the neckline. This is a neckline. Some people love to call it an M formation, as we know it as a double top, but whichever makes sense for you, you can follow it. Everything is the same. So we are looking at entering on that asset, on that level there. And most of the times, the target profit is this level here. The target profit is the height of the neck. I repeat, the target profit is the height of the neck. So when you make your entries, your target should be that. Any questions so far? Hello? You guys are too silent for me. What's not happening?
Hi, Mr. Coach, I didn't understand when you mean what you meant by saying target profit is the height of the neckline. What does it actually mean?
Okay, so that now brings me to take you here. So let me take you to this actually. Now, looking at this level, this is H4. This is our resistance, and that is our double top there. And this becomes our neckline. Are you seeing that? Now, if I say the target profit is the height, I'm saying you want to take your profits once price reaches there. Your entry, this is your entry. This is your entry here. Let me delete that so that I mark it properly. Entry point, and this is your TP level. That's where you're taking your profit. take profit. Are you seeing that? I hope this is very, very clear for you. Yes, Davis, are you there? This is a TP level because of that height from the very support level there to the neckline. The height of the neckline is what determines your first TP. Then our second TP is always the move that brings us to that level. So if I may do it like this.
I think Davis is not here.
Hey, Davis has gone out.
Hello?
Yes, Davis.
Yes, I'm hearing.
Are
Are
you
you
there?
there?
Yes, I'm on board.
Are you getting everything that I'm saying?
Yes, please.
All right. So this is the first TP level. This, the height of the neckline is the first TP level. And this is for those that normally love to hold. This will be the second TP. The height of the previous, move that took that level to the resistance. So I leave that at that. Any questions? And you can see all TP levels were hit accordingly. And once it hit that very second TP level, price started to reverse into the uptrend. Hello? Have you now understood how the double top works? How we make money using double top?
Coach,
Yes, sir.
the first arrow
Mm,
that is blue is facing down,
yes.
and you said that is the first. That's the entry point.
The entry point is here on the neckline. This is the neckline. Let me mark it. Entry point is the neckline. Neckline here. It's the
So
neckline there.
would you be selling coming down to
Yes,
hit the first TP level?
you sell from this neckline. You start to sell from there.
All right.
All right. You can either start to sell from there or wait for a retest. Most of the times we wait for the retracement. This is a retracement.
Mhm.
You can see after breakout, price has had to come again, like I showed you in here, like I showed you here, guys, like I showed you here, that price,
Yes.
when price breaks, it comes back to the breaker block.
Mm.
To that. When price breaks, it comes back to the breaker block. It always comes back to the breaker block where this the previous low is where price has come back to and continued to sell. Yeah, you understand. So that is a retracement you can wait for. Are you getting that?
First, yes.
Yes. So always risk-free entries are always when price retests back to the breaker block. We call it breaker block because it's where price has broken the structure to continue selling, or it has broken structure to continue buying in an uptrend. In a downtrend, it is continuing to sell. So that's why we call that a breaker block, the level where price broke structure from. So,
Okay.
going back to our thing, are we all of us on the same level? Judy, are you on the same level with us?
Yes, I'm following.
You're following. Anything confusing you? Questions?
Hello?
Yes, Davis.
Maybe if I may ask something some more, what does this word take profit level? What does it mean exactly?
Where you're taking it, just the way you read it. What do you understand when you read it?
Is it the starting point of making profit, or it
No,
is?
you're taking a
Okay.
profit. It's take profit. Are you
Oh.
understanding? It is taking profit. What do you understand by entry point?
Taking profit, I just wanted to understand whether that is the point where profit starts manufacturing.
No. You start and this is where you enter your trade from. On the entry point. You enter your trade
Yes.
from there. So it means all this level here is your profit already.
Okay.
So this is take profit number 1. Let me just rename it. This is take profit 1. And then this is take profit. This is take profit 2. Are you understanding? So it means you have an ability to enter two trades, 2 entries, or 2 positions, whichever you want to call it. Then you enter your 2 positions. One, you will take the first one, you will take your profits here. Then the second one, you will take your profits here, and you're out of the market. But if this is enough and it has hit your target profit, you don't need to take this other one. Are you understanding that?
Yes, please. Okay.
So the entry where you enter your market is this level.
Oh.
Are you understanding that?
Yeah.
And most of the times, when you're entering, let me use this. This is your entry. Let me use this. You can look for your stop loss just above there. Though sometimes it's big compared to the first TP level. Sometimes you find it is a 1-to-1. Are you seeing that?
Yeah.
The risk to reward ratio, if I put it on the very first level here, our first TP, then you find you'll be risking the same thing that you're going to take home. But if you now follow the second TP level, then your risk to reward is increased to 1-to-2. That's where you can see risk hash slash reward ratio is showing 2.57. We mean that is your ratio of risk to reward. What you're risking vis-a-vis what you're going to get. Are we on the same level?
Yes, please.
All right. So double tops, I think we are done with them. Any questions on double tops? Hello? Any questions on double tops?
So far, so good.
So far, so good. All right, let me find one more example of double tops. Then we can go to double bottoms. I think let me change and go to H4. This is a triple top. We'll talk about that later. This is a double top, but you can only see this when you are in line chart. This here. So if I change my chart to line chart, you can see that I have an M there. I have an M formation, meaning I could easily take this trade when I see that. So, but I don't want to start with you this because I may confuse you. So just delete that. Let me find a clear double top that we can actually use. All right, so here we have a double top. We have a double top. For them, there are a lot. That's a double top there. And we have our neckline here. We have our entry point there. we have our first TP level uh, here. That's our first TP level. Let me just put it aside so that you can see it. That's our first TP level. Then our second TP level is this one. But you can see it even exceeded it. It even exceeded it. That is our second TP level there. So first TP, second TP, this is a first TP level. TP level, Davis, I'm meaning take profit, so I don't get confused. And then, of course, if you had entered, then you're looking at all that, and you can have your stop loss just there. And as price goes on into profits, you can always bring your stop losses closer, and so that you don't risk a lot. So that's why we call that, trailing. You trail your stop losses into profits as price enters what? As price goes on in your profits. So uh, you can also trail your stop loss into profits, and then you are reducing your risk. All right, so that is how we work with double tops. Please, whatever you want to ask, please you ask, because you're going to give me homework.
Yes, coach, I have a question.
Yes, sir.
As you use those tools to draw the visual expression of what would happen in the real market,
Mm,
when you're trading, of course, now, like these candles haven't formed for you to
mm,
know that the market is going to go this way.
mm.
Would you draw, for example, and mark a chart like this before it has formed, and then uh, before it has formed?
Yeah, you make an anticipation. You make an
You
anticipation. So for instance, let's come to where we should be actually. For instance, now this is where we are. If I was to analyze this, let me
yes.
analyze for you this. If I was to analyze this, this is H4. I can first go to H1 daily. Then I look for my support and resistance. Um, I know that it has reached my support and resistance on the daily. It has reached my resistance there. I have my support down below here. That's my support. You can say I'm using the previous data. The previous
Mm.
low, I look at the previous low where it is, I see if it is connecting with this very one. Then I know that that is a support level. I look at on the left still, I see there's where price was rejected from and started to change trend, and now it has come back to it. Now I conclude that that is a resistance level. Have I answered your question, Davis? Is Davis on?
Hello? Hello?
Yes, have I answered you where you are asking where we get how do we determine the support and resistance level?
Yeah, I'm picking it now.
Yeah, you look on the left. The previous data is what gives you what to follow.
Okay.
All right. So now after seeing this on the daily, then I can know that actually it has reached the resistance level. So I may anticipate sales to start. So, but for me to anticipate that, I need other confirmation of that. So I can now drop down to H4, and in H4 I see that this is a break of structure and price has returned to it. but it has failed to go and make a new high there. Rather, the current candle is a sell, is selling. Unlike the previous where it has been breaking structure and coming back to it. You can see there, it has been breaking structure and the retest and then continue. And it comes again to retest this previous candle there where it made the retest and then continue. That is what has been happening. But now we can see that price has failed to do that. It is actually now trying to sell. So if I see that on H4, then I come to H1. H1 will be giving me a sort of a clear double top. Are you seeing that? Are you seeing that, guys?
Yeah, we can see. So,
So
let me cut you short. So simply, it's like you're trying to say double. When you use double top to analyze, you are selling, yeah,
of course, double tops they are for
for
sales.
the sales.
Double bottoms they are for buys.
Okay.
Yes.
And the best hour to analyze is on the 4 hour or
It
one day
depends.
or
It depends what you want, but always me if I'm starting a new chart like how we've started this, you've seen me. I've gone to 8 to daily. Sometimes I go to weekly to understand more detailed information, but I go to daily to look at my support and resistance levels. Then I keep dropping down to the rest of the time frames.
because it confuses. Sometimes you can check the chart and you see as when you check on the daily, you see like it's buying. Then on the 1 hour, it's selling.
Yeah, you need to always this note this down. You always follow the trend of the higher time frame.
Okay,
Always follow the trend of the higher time frame.
all right.
If daily is selling, know that in the long run it's going to sell. If you find on H1 it is buying, know that that is just a retracement and it will later on start to
All right.
sell.
Mm.
Are you understanding?
Mm.
All right. So
Okay.
normally I follow a lot what I see on daily and H4, and then I drop down to M15 to find entries, or probably no, even I sometimes I even enter at H4 as long as I
Mm.
know that I've seen what I'm looking for. So
Okay.
for the double top, this is a double top there. You can
Mm.
see that. And then price,
Yeah.
now we are waiting. If price comes, Mzee, what you're asking, if price now comes and breaks this level here, then I may anticipate a retracement back there.
Mm.
Then I make my entry on that level there. Then I sell it all the way down.
Mm. Okay. Thank you.
Mzee, are you with me?
Yeah, I am with you. Very
Yes.
clear now.
Yes. So that's how you anticipate, you make an anticipation using the previous data that has been given to you. You make an anticipation and you look at, okay, according to price action, this was a break of structure. It came and retested and then went ahead, and still here it broke structure again, then came and retested. It actually continued and retested a bit further to this order block, to the previous order block. It never retested to the breaker block. It came and retested to this order block. Mm. Now, after knowing that, then you come and see, oh, it was supposed to go here. After retesting here, it was supposed to go and make a new high, but it failed. Now, if it failed, it means it has done what? It has found a resistance. This is a resistance that it has found. It means now it is starting to sell. But we can only confirm that if it breaks our previous low. Are you understanding? We can only confirm that if it breaks our previous low. This is our previous low, higher low, higher low. This is our previous higher low. So if price comes and breaks that level, then we are confirming that the trend has changed. Until it does, it fail until it breaks that level. we are still in the bullish, we are still buying, we are still in a buying trend or in an uptrend. Nothing has changed yet. Are we together? So until there's a break of structure, that trend, you still follow the previous trend, and of course of which we're still seeing this was an uptrend or the bullish trend. So it means until this breaks here, we are still looking for buys, but you don't enter for buys because you're seeing some resistance. So you wait for the breakout there. If it fails to come down, then it will come and break from there, and then you wait for a retracement as usual, and then you enter buys. Are you understanding, guys?
Yes.
Or I'm taking you on a high speed.
No, it's
Remember,
clear.
remember we are still on double tops. Davis, you're silent on me. I hope everything is
Everything
going
is
in
going in
the way I'm
the way
explaining.
I'm explaining. Yeah, we are moving on. We are picking. We are running.
All right.
All right.
I don't want us to
I don't.
run. I want us to walk slowly so that you understand. So if you say we are running, I get scared. I don't want to make problems to you guys. So I want to be sure that we are walking actually, not running. Are we running or we are walking, Davis?
Hello.
Yes, Davis.
Yes, Davis. Yes, I just wanted to know now if a trader
Hmm.
observes a resistance,
Um,
what would be the next step to do?
the
The
resistance
resistance
gives you
gives you
a first
a first
mute yourself.
mute yourself.
The resistance, it tells you what is happening, that sellers are refusing buyers to continue. The support level tells you that buyers are refusing sellers to continue. They want to get a share of the market also. So when you see a resistance like this, it means sellers have said no, enough for the buys. We also want some shares in the market. So they start to push for the sales or the bearish trend. So, but now it's not confirmed. So it means once you look at that, you know that you have now one conference or one confirmation that sales may start. The next confirmation would be for this to break, for price to break that level, the neckline, because now we are seeing a double top. So if price comes and breaks this neckline here, then you don't enter immediately. You wait for a retracement. If the retracement exceeds this level and continues, then you have no entry for the sales. You want to enter when price comes back to this and you start to see sellers now engaging in and selling it. Then you also enter. Have I answered you, Davis?
Yes, please.
All right.
All right.
So I think for double tops we are done. And I want you guys to note this, that what we've done here on the double tops, it's directly, it's indirectly the same as the one for double bottoms because they are the same. So, an example, double bottoms. Let me look for a double bottom. This is what H1. I'll just go to H4. Let's just go to H4. We look for double bottoms. Okay, this is more of a triple bottom. I want a clear one that we can all see. So there are many here, and even this is a double bottom, but I want a clear one. We want a clear one that we can use, and we all see what we're talking about. Double bottom. This is what H4. All right. So I can use this. I can use this as my example. This is a double bottom there. Price went, then it later came down, then it started to push. This is the neckline. That level there is a neckline. So uh, your entry is there, is on the neckline. But like I've said, your you can either enter, depending on the time frame, you enter on the second candle after the breakout, or you wait for the retracement, this retracement here, this retracement here. Then you can now make your entry on this very candle there, and then start to buy it. So it will depend on what you choose to do, but this would be an ideal for you to wait and use it as your strategy. Always to wait for a retracement after the breakout. That would be the candle that you would enter from to continue buying. But the buy would have started all the way here after the break of the neckline, because this is a double bottom. Your TP level, first TP level, as we said, you're looking for that, the height of the neckline, and that would be your first TP there. And you can see after hitting the first TP, price reversed, price retested. It started to retest for some hours or days, or a day actually. This is 4, 8, 16, 20, 24, about 24, and it started to, about a day, it spent in retesting. Then after that, look at what happened later on. All that was money just because you anticipated the double bottom. All this would be the money. So if I was using this is my entry, this is my tight stop loss there, and then this is my profit. The other profit, like we said, the other profit would be this. That would be the other profit. So you would want to see it all the way there, and you take a profit. That would be your second TP. All right. So I think that's it. Any questions on double bottom? Because it's almost the same as what? It's just the reverse of double top. So that's what you're looking at. Hello,
Yeah, looks clear.
looks clear. Davis,
Hello.
yes.
Maybe I just wanted to know where the entry point is there and
But I've showed it
the
to you.
profit.
This is the entry point. This arrow there on the neckline. It's you who actually made the research and talked about the neckline. So the neckline is that. Did you understand the neckline?
Yes, I can see it now.
The neckline is there. So you enter once price breaks the neckline.
Yes.
Advisably, on the second candle, when after price has broken out of the neckline, or the most one I normally advise is to wait for the retest. This kind of retest after the breakout, then you enter.
Oh, Oh, yeah, thank you. I've got it.
All right. Judy. Hello, Judy. Is Judy on the call? Judy, are you there?
Yes, I'm here. Yes, Mwende.
Yes. Talk to us. Any questions, any challenges you've seen?
Some people are disturbing me here. And maybe what I can ask about that double bottom.
Hmm,
So it's the opposite.
it's the
And
opposite of double top.
yeah, it's the opposite of double bottom. So there is they mean what? The support level is on top now, or it
No,
still remains bottom.
the support. This is the support. Whatever is on bottom is always support. This is support.
Okay,
Then
okay.
whatever is
That's
on top is resistance.
yeah,
The other
all
one was
right.
resistance level.
Okay.
Yes. All right. Should we go ahead?
Yes.
All right. Um. Now, now that we've seen that, um, you will note down in your books wherever you're jotting down your notes, homework, and I will expect everyone to present to us tomorrow. Tomorrow is Thursday. It's our last day of the week. Yeah. So everyone will present to us one example that he has looked. I don't want the things that are Googled. Don't go to Google and get photos from Google. I will know. So I want you will open your charts and look for one double top, one double bottom, and you will present to us and show us the neckline, show us the entry point, show us the TP, the first TP level, and probably even the second TP level. So if you're writing, please do that. I will expect to see that presentation tomorrow.
Me,
Yes,
excuse me. Me, I don't know how to use those instruments.
I have. Then that will be the homework to tell probably Moses
Oh,
to Moses to show you how to do that. It's homework. Um,
okay. Oh.
you will have to. If I had asked a question earlier, I would have done that.
Mm,
I would have showed you how to use them. But right now we are using TradingView, so it would be hard to show you unless if I was using a phone. Because if you have a phone, it's different from when I'm using a laptop.
okay. All right.
So you will tell Mose if he comes around that you have a homework and you need his help.
It's all.
All right. I don't know about Davis. Davis, Mose, will you help Davis? Because I know Mose, you already know how to use trend lines and what have you. You already know, not so?
Yes, I do, coach.
Yes. So I don't know uh, if you will help Davis, or if you will go to Google, I mean to YouTube. Davis, are you with us?
Yes, please. I'm online with you.
So you will need to know you will have to learn how to use trend lines during the course. So these are trend lines. Anything that is to do with this is a trend line. So you will have to know how to use them in the coming days because you need it. So I don't know if you've already downloaded MT5. Have you?
I wanted to do it together with Mzee Yahweh,
Yeah, so
and we are going to arrange and see how to effect all those.
okay. I don't know what time or when, but you have homework to do today. and tomorrow, so that by 3 you be able to present to us your homework.
And again, I beg your pardon on the question we are to start. You said one with double top and one with double bottom.
Yes.
And we are
Um,
expected for entry levels. What else?
you are expected to show me the entry level. You are supposed to show me that actually this is the double bottom because it failed to break this. So if you can be able to draw the box, that would be better. But if you determine the double bottom, then I'll be wanting to see your entry level, your first TP profit, or your first take profit level, and then if you can still the second TP level, then that's it. The neckline, the first TP level, and the entry point, and then the second TP level.
Okay, thank you.
All right. So we have about 20 minutes to finish our session today. In those 20 minutes, um, I would have gone to I would have gone to heads and shoulder, but I want to first know that you don't have any questions concerning double tops and double bottoms. Remember, we started with reversal patterns. So whatever we are looking at currently, we are looking at the patterns that happen or that the market forms when it's about to reverse the trend. Are you understanding? So, like I had explained earlier, that in an uptrend, now you can see we are coming from a downtrend. This was a downtrend that was making. Let me delete that. This was a downtrend that was making lower lows and lower highs, then lower lows. Then it failed to make, it made a lower high, but it failed to make a new lower low. So it started to make a lower, a higher low. Then from there, it broke structure. It gave us a higher high, a higher low, a higher high, a higher low, like that, like that. Are you seeing that? Are you seeing that?
Yes, coach.
Yes, please.
So whatever we explain down below here, please. I don't know how many times you will need to rewatch the video so that this thing that we've just talked about, you get it, like you grasp it properly. But you need to know all this information. The trend, how the trend moves. The downtrend is lower low, lower high, lower low, lower high. The uptrend is higher high, lower low, higher high, lower low. Are you understanding that?
Yes, coach.
Maybe what I have not understood is a difference between a high high and high low,
Hey,
then low low.
Davis, we explained
Yes,
this other side. Let me go back to my notes here. I don't know if I'll
yes,
be able
please.
to see them. Here, the higher lows from this level here. This is the high. I've said for a market to be in an uptrend or a bullish trend, market makes higher highs and higher lows. This is a high, this is a higher low. Are you understanding?
Yes, yes, yes.
Retracing back, that is a higher making a higher low. I told you at the start of this that market doesn't move in a straight line. It doesn't move like that. Market moves making high highs and higher lows, higher highs and higher lows, or market can either move making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Are you understanding that? That's how the market moves. The market doesn't move in a straight line. Are we together, Davis?
Yeah, it is clear now.
It is clear.
Thank you.
All
Yeah,
right.
sure.
So I don't know if I'll be able to get where we were. Yes, this it's here. Page 4. H4, H4, H4. All right, so we're here. So what happens here is the highs and lows, because now higher highs and higher low, because now market has shifted the trend, has changed the trend, and it has, we normally call that, it has broken structure. Now it has gone to the uptrend. The shift has happened from this level here when it gave us a double bottom. So that market shift triggered us to enter the bullish trend. Are we on the same level, please, guys? I don't want anyone to be left behind before we can go into heads and shoulder.
Yes,
These
coach.
these are the very simplest patterns to find in the market. The heads and shoulders will be somehow difficult for some of you guys. So that's why I want us to be able to understand properly the heads and shoulder. The double bottoms and double tops uh, on this very level that we are on. Judy, any questions? Judy,
Yes.
questions, are we
So
on the same level?
yeah, together when it's on the upward trend, it has higher high and lower low.
No, 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 no.
Mm.
Upward trend is higher high and higher low. Higher high
Higher high and higher low.
and higher low.
And then on the downward, it has
Lower
lower
low,
lower low, lower
lower
high.
high. Exactly.
Okay.
You want to see that what comes first is what you start with. On the
Mm,
uptrend, you start
mm,
with a high, then you reverse to a low. That's why we say
mm.
higher high,
Higher
higher
high,
low.
higher
On
low.
the
Okay.
downtrend, you start with a low. This is a low. So it means you're
Mm,
starting with a lower low, lower high, lower
lower
low,
high.
lower high, like that, like that. Are you understanding?
Okay. Yeah.
All right. All right. Now I want us to shift. Please, I've asked several times if you haven't understood uh, double tops and double bottoms, you ask questions. Now, because we are now going to heads and shoulder. Whatever you've not understood, please uh, be free to ask. Be free to ask. All right, we have no questions. Now we jump to, I want to clear everything now. I want to clear everything. Now we jump to heads and shoulder. Now, heads and shoulder uh, happens when market is in an uptrend. It does that. Higher high, higher low, higher high, higher low, higher high. Then when it gives us a higher low, it comes and gives us a lower high on the same level on the previous low, meaning it's trying to push for the sales but it has found a point of interest that is becoming a support now. So it now reverses from that level. Now, as it is going back, it fails to break the previous order block there. This this is the previous breaker block, I mean, where price first broke through, going to make a new higher high there. This is a higher high. You understand? That is a higher high. Uh, that is a higher high, and that is also a higher high. So price has returned to price first came, returned to this level, failed to break it, going into sales. You understand? When it had already made a high, initially it was supposed to come back to this level and then continue up. Are you seeing that? That's how the market should move. High, then come back to the breaker block, then continue to make a new high above there. But it did. It actually broke through the breaker block and went ahead to the previous lower low. It went ahead all the way to the previous lower low. And when it reached there, it failed to break the previous higher low. It failed to break this previous higher low. This is a higher low. That's a higher low. So market failed to break that previous higher low. Are you with me, guys? So market failed to break that previous higher low it from this level. So it came and made another higher low. It came and made another higher. It is not happening. It came and made another higher low there, here. So once it made another higher low, uh, it started to continue to go back into buys, because now this is a support level. It has now found a support level here. It returned to the breaker block, but now as it is going back, it meets that very level, this breaker block, of which now turns to become a resistance level for this price, and then we see a drop, and then we see that drop happening. That becomes a what? This becomes a heads and shoulder. This becomes our heads and shoulder. Now, we have our heads here. This is the head. This is the head there. This is the right shoulder here. I mean the left shoulder. Then we have the right shoulder here, this other side. We have the right shoulder there. So entry point, some people most of the times, like me, I'm a high risk, I have a high risk appetite. So I normally enter when price reaches there and starts to go down. But I be having a moving average indicator that I use. Once price goes below that, then I make my entries probably around here, like on the second candle when it starts to sell. But the entry on books that I want you guys to follow is when price breaks this level. When price breaks that level, which is our neckline there. Hello? Am I confusing you guys? That's a neckline. That's our entry point. That's the neckline, and that's our entry point. On this kind of this kind of a pattern, sometimes you can enter directly, but other times you can wait for a retracement. Like I said, this is a breakout, so you may want to wait for a retest there, so that you have an entry, a risk-free entry. Then your stop losses are always on that level there, above the shoulder there. That's where you put your stop losses. And the TP level, as always, you're aiming at the height of that. That's the height of that neckline there. It's what you're looking at, and then you're taking your TP level. That would be your take profit level there. Take profit level. So that is our take profit level there. All right. Any questions on this before we go to look at them in the real market? This is the heads and shoulder. The other one will be the vice versa of this. Hey, this silence is alarming. It means I'm a
We
good
are,
teacher or I'm a bad teacher.
no, we are digesting, coach.
You are digesting.
Yes.
Davis, are you with me?
Yes, we are together.
Judy, are you with me?
Yeah.
I hope the speed is not much. I wanted to leave
No,
heads and
it's
shoulder.
okay.
I wanted to leave the heads and shoulder and we start it tomorrow, but we still had some time, so that's why I introduced it. But right now, I can leave you guys to digest. Then we'll start we will continue with the heads and shoulder tomorrow. Is that okay with you?
Yes, coach.
It's evening, so I know you had already a long day. I don't want to pile you with a lot of things and I confuse you.
Let me ask before you go.
Yes, yes.
This one also you check it on the from the highest time frame, right?
Any time frame you can even see a heads and shoulder on a daily. You can even see a heads and shoulder on H4. You can even see it in 1 minute. So it doesn't matter. It doesn't matter the time
Mm.
frame you're in. As long as you notice a pattern like that, know that it is going to sell. Are you
Mm.
understanding?
Okay.
Yeah. If you see a heads and
But if
shoulder,
it gives if it gives a confirmation like on the 15, you should not stay for long.
yeah, of course you have your TP level. You have your TP level like I've showed you. The
All
height,
right.
the height of this, of the head.
Okay.
So it's what you
Okay.
follow. This very height is what you follow, and you're out of the market. You don't need to, as long as you make your money consistently, you don't need to prove to anyone that you want to
Mm.
even wait for the second TP or even the first TP to be hit. As long as you make your clean money, as long as your account is increasing, it is what is important. So no need to prove to anyone. I mean, Zainabisoma, I've learned these things. I know it is going to come to that level. My dear, it may retest and take your profits. You understand? So
Yeah. Mm.
all that matters is for you to always be consistent in making money, not consistent in making losses.
Oh, yeah.
All right.
Okay.
Muzei, talk to me. Are we good? Any questions you have?
No, I think I'm just appreciating better understanding.
Sorry, I didn't get that.
No, I'm only appreciating that I'm better understanding what I thought I knew,
You're getting it now.
and I realize I didn't know. Yes.
Yes, that's good then. Then I don't know. Let me say kudos to me that I'm making you understand it better.
Oh yeah, good. Yeah. Thank you very much. You did a good job.
All right.
Yeah.
Davis, talk to me.
Yeah, I think the lesson has taken us to another level. Maybe we shall build from there.
Exactly. So I don't want to give you much food for today because it may make your stomachs const- constipate. Is it
Con-
is the word?
Something like
You may
that,
have
coach.
a constipation.
Constipation.
Yeah, so let me just stop from here. We will. I'm not going to give you a homework of heads and shoulder because we've not looked at it in real market. So that means tomorrow, please. I know you are good students. You will have time, even if it is an hour, to just look into the homework and find one double top and one double bottom, and then we start from there tomorrow. But otherwise, thank you guys for being with me. I know I talk a lot sometimes, but I need to explain to you guys so that at the end of the day, uh, you have you find value in your money. Yes. Let me wish you guys a good evening and see you tomorrow, same time at 3.
Thank you,
Thank
coach.
you. Have
All
a good
right.
Thank
day.
you for the lesson.
Thank you, coach. Thank you very much.
Before we close, Musei, you will help on Davis as he's going to look for MT5 because he needs to present his homework tomorrow. And I can't do that if he has no MT5 and the account actually, a demo account. Uh, so I already sent him the link for the leave to open a demo account so he can, I think, I don't know, you will, if you can help him on that.
That is okay, coach. Let's see how we can catch up with him.
All right. Thank you again, once again, guys. See you tomorrow, same time. Have a good evening and a good night.
Thank you, you too.
Thank you. Have a good evening too.
Thank you so much.